Welcome to Module 5 of Managerial Accounting. Our readings for Module 5 are going to include chapters 13 and 14. The topics we'll cover in this module are going to be differential analysis, chapter 13, capital budgeting, which is covered in chapters 14. We'll discuss your deliverables for this module. And finally, we'll talk about this module's discussion, which is a stepping stone for your final project in an upcoming module. Let's begin with differential analysis. Managerial accounting is about providing information that helps managers make smarter choices. Not every cost is relevant for every decision. And that's the core idea behind differential analysis. In this chapter, you're going to learn how to focus on the costs and revenues that change under different alternatives by zeroing in on what's relevant. And with this, managers can avoid information overload. It can make things clearer and make more profitable decisions. With the use of this analysis, we'll explore some common business scenarios, such as adding or dropping a product line or business segment. Do we make or buy a component for our processes? Do we accept a special order? Using a constrained resource like limited machine time or materials to make business decisions. Selling as is, or do we process any further? In each case, the key is to compare the differences in costs and revenues between the alternatives, while ignoring sunk costs and other irrelevant data. Differential analysis is practical, fast, and powerful. It helps managers cut through the noise and answer the question, which choice adds the most value to my company? Topic 2, capital budgeting decisions. Some decisions and some are the most important decisions for managers face these long-term investments, like purchasing new equipment or expanding facilities, maybe launching a new product or upgrading technology. These are capital budgeting decisions, and they shape a company's future for the years to come. Because these products require large sums of money and carry significant risk, managers need systematic tools to evaluate them. These are capital budgeting decisions. In this module, you'll learn how to apply time value of money concepts to evaluate cash inflows and outflows. We'll use methods such as net present value, internal rate of return, payback period, or simple rate of return to analyze investment opportunities. We'll learn to recognize the strengths and limitations of each method. You'll learn to understand capital budgeting supports strategic decision-making by aligning investment with long-term goals. Capital budgeting is where the numbers meet strategy. The techniques you'll study here help managers decide not just whether to invest, but where to allocate scarce resources for maximum impact. Homework for Module 5. You begin by reading the Smart Book assignments for chapters 13 and 14 and your concept videos for reinforcement. Once you've completed them, you move into your homework, if you've done in previous models. You'll have an opportunity to apply your knowledge once again with your concept and practice exercises in the ongoing simulation, Annie's ice cream. Now let's move on to the final piece of our module, the discussion. This week's discussion gives you hands-on practice with capital budgeting, using the tools from Chapter 14. You'll propose a large-scale investment project for your company, maybe a piece of new equipment or facility expansion or a new product line. You're going to evaluate by using decision-making methods such as NPV, IRR, payback, or profitability index. You'll then interpret your results, consider the risk and strategic alignment, and address qualitative and ESG factors. Your responses will focus on evaluation peer recommendations and suggesting follow-up controls to ensure that the project stays aligned with your financial goal and your company's strategy. This exercise prepares you for the capital budgeting section of your final project. Please see Canvas for details and other specific instructions. Good luck. If you have any questions, Please review your weekly Canvas announcement and contact your instructor.